Welcome everyone to the Tech Stocks Daily Podcast, your go-to source for all the latest in technology stocks. Today's tech news spotlight shines on Google's latest AI model, Gemini 1.5 Pro, introduced by Alphabet Inc. This advanced large language model stands out for its ability to analyze extensive data like an hour-long Joe Rogan podcast or a small book, granting users the capacity to sift through them later. The leap from its predecessor, Gemini 1.0 Pro, is substantial, with Gemini 1.5 Pro able to process about 700,000 words or 30,000 lines of code, which is 35 times more than its forerunner could handle. What sets Gemini 1.5 Pro apart is not just its text processing capabilities, but also its proficiency in handling up to 11 hours of audio or an hour of video in various languages, thanks to its support for up to 1 million tokens. Google hints at the potential for even greater capacity, having successfully tested up to 10 million tokens. This could mean in the future, users may be able to upload content with up to 7 million words, 300,000 lines of code, 110 hours of audio, or 10 hours of video. However, the version of Gemini 1.5 Pro currently available for most developers and customers caps at processing around 100,000 words at once. Google has deemed the high data input version of Gemini 1.5 Pro experimental, limiting its access to approved developers through its GenAI dev tool AI Studio. Despite these limitations, Google's achievement marks a significant advancement in AI capabilities, hyped by Oriol Vinyals, VP of Research at Google DeepMind, who stated, "We've unlocked long context in a pretty massive way." In today's market activity, Apple made headlines after it was confirmed that the tech giant intentionally limited the functionality of progressive web apps, PWAs, in its latest iOS 17.4 update for users in the European Union, EU. This move came in response to the initial discovery during the iOS 17.4 beta launch that PWAs were not performing as expected. Despite several subsequent beta versions, there were no improvements. Apple clarified that these changes were in direct response to the Digital Markets Act, DMA, stating that to comply, it had to undertake significant engineering work. This included adding over 600 new APIs and various developer tools specially crafted for the EU, which led to the removal of traditional iOS system support for home screen web apps based on WebKit and its security architecture. This effort to adhere to the DMA's requirements has sparked a notable discussion on the impact of regulatory measures on technology and service delivery within the EU. Nvidia Corp was in the news today as it's gearing up to report its fourth quarter results on February 21st, with analysts eagerly offering their insights ahead of the announcement. Notably, Wedbush analyst Matt Bryson has maintained an outperform rating on Nvidia, boosting the price target from $600 to $800. Predictions from his mid-December travels in Asia pointed to strong quarter trends, with expectations of surpassing estimates and raising future guidance. Such optimism is driven by the sustained momentum in AI infrastructure spending by cloud service providers, CSPs, with many planning to hike capital expenditure in 2024 chiefly for AI investments. Bryson highlighted a continuing high demand for high-bandwidth memory, HBM, forecasting Nvidia as the main consumer of these components in 2024. Furthermore, Oppenheimer analyst Rick Schaefer echoed the confident sentiment by reiterating an outperform rating and adjusting the price target from $650 to a new high of $850. Schaefer detailed that Nvidia's recent successes are primarily fueled by increased investments in data center accelerated computing by both CSPs and enterprises. He also mentioned the forthcoming ease in packaging constraints and extolled Nvidia's robust hardware-software platform as pivotal to fostering a broad AI ecosystem. Nvidia's strong performance, demonstrated by its significant year-to-date appreciation and standing for its best-in-group gross and operating margins, marks it as a principal large-scale investment in AI growth. The enduring structural growth, especially in data center AI, bolsters Nvidia's commanding position in the data center AI ecosystem, essential for the propagation of generative AI. Amplitude is making headlines today due to its involvement in a securities class action lawsuit. The lawsuit focuses on allegations that during the class period, Amplitude made false and/or misleading statements and failed to fully disclose that its land and expand strategy, aimed at growing revenue by upselling existing clients on increased usage and new products, was actually years away from significantly accelerating revenues among its newer client cohorts. Additionally, it is alleged that the rapid acceleration in Amplitude's second quarter of 2021 results was not sustainable and mainly resulted from the short-lived effects of the COVID-19 pandemic, which did not continue by the start of the class period, seeing Amplitude's clients expanding at a slower pace. This situation came to light on February 16, 2022, when Amplitude revised down its 2022 revenue guidance significantly and admitted during an earnings call that many of its new customers were a few years away from completely embracing the full capability of Amplitude's digital optimization, which was expected to eventually drive larger expansions. Following this announcement, the price of Amplitude stock fell nearly 59%, causing significant losses to investors. This dramatic drop and the preceding actions have led to considerable interest and scrutiny around Amplitude's disclosures and practices, culminating in the class action lawsuit for securities fraud. Today's market sentiment seems to be a mix of anticipation and scrutiny, mirrored by significant developments across prominent technology companies. On one hand, Nvidia's upcoming fourth-quarter results have spurred optimism among analysts, with adjustments in price targets reflecting high expectations around the company's performance, particularly in AI and data center investments. Nvidia's case suggests a bullish outlook on technologies that underpin AI's growth, pointing towards continued enthusiasm for innovations and growth in this sector. Conversely, the market has witnessed apprehension due to Apple's admission of intentionally limiting the functionality of progressive web apps in the EU to comply with the Digital Markets Act, shedding light on the challenges tech companies face in navigating regulatory landscapes. This scenario may prompt investors to consider the broader implications of regulatory compliance on tech innovation and service delivery. Furthermore, Amplitude's involvement in a securities class action lawsuit for allegedly making misleading statements about its growth strategies adds a layer of caution. The revelation of unsustainable revenue growth predictions, especially amid the backdrop of the COVID-19 pandemic, highlights the importance of transparency and the potential repercussions of failing to meet market expectations. Overall, the day's market sentiment is characterized by a blend of optimism for future technological advancements and growth, particularly in AI, tempered by a cautious outlook on regulatory challenges and the imperative of corporate transparency. This dynamic underscores the complex interplay between innovation, regulation, and investor expectations shaping today's technology sector. In today's tech news, an amusing and unusual story caught our attention. Mark Zuckerberg, Meta's CEO, openly mocked what he referred to as Apple fanboys over criticism he received for his review of Apple's Vision Pro headset. During an episode of the Morning Brew Daily podcast, Zuckerberg humorously remarked on the defensive reactions from Apple enthusiasts whenever there's a suggestion that Apple might not lead in a new space. He contrasted Meta's Quest 3 headset, praising it for offering better value at $499 compared to Apple's Vision Pro headset priced at $3,499, and even argued it to be an overall superior product. Furthermore, Zuckerberg playfully pointed out the media's overt assumption of Apple's superiority due to its high-priced products, despite alternative recommendations for Quest 3 based on its better pricing. Despite his jest at Apple supporters, Zuckerberg maintained a respectful demeanor towards Apple, acknowledging its quality and productivity, but emphasizing Meta's agility and promise for rapid improvements. This peculiar exchange highlights the ongoing rivalry and competitive banter in the tech industry, especially in the burgeoning VR headset market. As we wrap up this week and look towards the next, the tech market seems poised at a critical juncture, with several factors potentially shaping its direction. Nvidia's much-anticipated fourth-quarter results, set to be released on February 21st, promise to be a significant marker. The positive analyst sentiment surrounding Nvidia, particularly regarding its AI and data center investments, could provide a substantial boost not just for Nvidia, but for the broader tech sector as well. Success or higher-than-expected results from Nvidia might reinforce confidence in the tech industry's growth potential, particularly in AI, and could lead to increased investor interest across the board. On the regulatory and compliance front, Apple's adjustments to progressive web apps in the EU, in response to the Digital Markets Act, underline the ongoing challenges tech companies face amid evolving regulation. This situation may hold investor attention, as it illustrates the complexities of navigating international legal landscapes, which could impact company operations and investor sentiment. Additionally, the developments surrounding Amplitude's class action lawsuit represent a cautionary tale on the importance of transparency and the potential volatility risks associated with tech stocks. How these legal issues progress could influence market perceptions of risk in tech investments, particularly in companies embroiled in legal or regulatory controversies. The humorous critique by Mark Zuckerberg of the Apple Vision Pro also points to the spirited competitive landscape within the tech industry, particularly in emerging technology domains such as VR. This ongoing rivalry may spur further innovation and investment in the sector, offering potential market movement opportunities. Given these dynamics, the market outlook for the coming week hinges on a blend of earnings expectations, regulatory developments, legal challenges, and competitive maneuvers. While the overarching sentiment seems cautiously optimistic, especially with AI and data center growth, investors and enthusiasts alike might do well to keep an eye on these pivotal factors, as they could significantly influence short-term market movements and set the tone for the broader tech landscape in the weeks to follow. Today's market activity presented a mixed landscape in the tech sector, encapsulating moments of optimism, regulatory challenges, legal uncertainties, and industry rivalry. Nvidia's strong market position and upcoming earnings report have injected a sense of anticipation, highlighting the bullish outlook on AI and data center innovations. Contrastingly, Apple's strategic adjustments in response to EU regulations underscore the complexity of global tech operations amidst tightening laws, while Amplitude's legal woes caution against the backdrop of corporate transparency and investor expectations. Amid these dynamics, Mark Zuckerberg's lighthearted critique of Apple's Vision Pro throws a spotlight on the competitive yet innovative spirit that continues to drive the tech industry forward. As we close the day, these varied developments paint a picture of a sector at the intersection of growth and adaptation, where optimism for technological advancements coexists with the prudence necessitated by external challenges.